Bill, let's talk about this. What kind of considerations go into making a decision like this one?
They want to behave in a way that does not risk causing turbulence in financial markets. So the reason to do the taper is you're not really sure what the desired level of reserves is in the banking system. So you want to approach the runway very, very shallowly rather than steeply, especially when you don't know where that runway exactly is. So I think the taper is a prudent course of action. It doesn't really matter if you get to the desired level of reserves in 2 years versus 1 year. It's just the fact that you get there. So I think that they're going to discuss it at the March meeting. That was made clear by Powell's last press conference and in the FOMC minutes. And then they'll talk about the staff's proposal, and I think we'll see a final plan by mid-year.
Bill, you've said the central bank needs to shrink the balance sheet enough to rebuild the stimulus arsenal. I just want to get into that a little bit more. I've said this to you before. I feel like this is some kind of Jedi mind trick at the Federal Reserve. They want you to simultaneously believe that QE stimulates and QT does nothing. Bill, what does QT actually do?
Well, QT does withdraw restraint that they've put into the system previously, but economists who have looked at QE versus QT find big effects when there's QE announcements, very little effects when there's QT announcements. And the reason is sort of obvious. You don't ever know when a QE program is going to be implemented. The economy has to be really falling apart. Interest rates have to be at the zero lower bound. So QE is usually a surprise. QT, though, once you've done QE, you know QT is going to follow at some point, that the Fed's going to ultimately unwind the QE that they did earlier. So when QT happens, it's really a question of timing and magnitude, duration, not whether it's going to happen or not. So it has pretty much more milder effects.
There's also a Jedi mind trick going on, Bill, when it comes to financial, just in general conditions. The fact that we've seen dramatic easing in financial conditions, and that doesn't seem to be weighing on the Fed in terms of how that affects their ability to get to 2%. But when you saw a sell-off, that was concerning and some sort of restriction. Does that concern you that the easing in financial conditions doesn't seem to be anywhere on the radar of Fed officials?
Well, I think it's in the radar in the sense that the reason why financial conditions have eased is because people expect the Fed to cut rates this year. But the Fed actually has to cut those rates to keep financial conditions where they are today. I think at this point, we know that March is off the table. May is probably off the table, too. We're really talking about Fed cutting rates probably sometime this summer. The focus at the meeting, as I said, is going to be, Powell's going to get a lot of questions about the QT taper since people know that's on the table. But the other thing that's going to get a lot of attention is the summary of economic projections and how many rate cuts do Fed officials pencil in their forecast. Last time, the median was 3. I would guess the median will be 3 again this time, but there's some possibility, given the firmness in the inflation data, that maybe there's only going to be the median is going to shrink to 2. But I bet they keep where they were last time. There's still plenty of time, still plenty of meetings this year to cut rates 3 times.